Greetings, the Hedgeless Horseman here. It's April the 19th, 2024. I actually did a video yesterday, I think, or maybe 2 days ago, which I haven't uploaded yet. I don't know if I will. But anyway, so here's another one, which I guess I might actually upload first. Topics in this video will be game theory, or I'm gonna focus on game theory just to show that, well, how I think about again the market right now, right here, and I've talked about this quite a few times before, but I think it's worth repeating why I am, let's say, pretty chill about things. And most of the time on Twitter I post memes and charts, and I mean I don't really trade based on any charts. It's just fun to put up. It keeps me busy. I mean it's the same with me doing let's say micro trading. I might trade for like 0.001% of my portfolio some days. Doesn't really have much of a impact, and maybe even, I mean, first of all, not much of an impact to the portfolio anyway, so it's almost pointless. And some of the trades might actually be bad, that I just all of a sudden I get an urge to buy this stock, and then I change my mind like 2 days later because I revisit one of my, let's say, top holdings, and think that, why even have any capital in this other junior that is probably cheap, but still it's like I don't have the conviction. It's going to take such a long time to get real big conviction. I might as well put some more money into a stock that I know I'll be first of all that I think is a great opportunity, but also that I probably have an easier time to just sit still in. But I think it's kinda, even though it might not be really profitable in a sense, that micro trading, but at least it kinda feeds into my the human nature of trying to fix things, trying to do stuff. Because in almost anything else, any human endeavors, more activity typically leads to better results. Investing is one of extremely few human activities where less activity, meaning trading, typically leads to much better results. So it's very counterintuitive to us humans, and that's actually the hard part. And you can hear a lot of people talk about that, or legends like Jesse Livermore. It wasn't I think his quote goes something like, it wasn't buying or selling or whatever that made me the big bucks. It was the holding tight, something like that. It's like just sitting still. He bet on something which he thought could pay off big time. He was after big moves, and by definition then you have to hold them over a long time period, because a big move cannot happen in a day or a week or a month. Typically it can take months or years. So I mean, it sounds so easy, and if you look at charts in hindsight, it's like, why didn't I just buy there and hold hold for a year or 10 years or 20 years? Actually doing it is completely different, because every day you feel like you need to do something, and by doing something we feel like doing something we see as the opposite of doing nothing, even though it's like doing nothing is a choice, same as doing something, and it's actually more profitable, but it doesn't feel like we're doing something. It's not like if we're a bricklayer, it's not like, if I don't lift any, or if I don't lay any bricks, the house is gonna get built by itself. No, it's the opposite. But in investing, it's actually the other way around, because you're buying into people's labor. You're buying the time of the management team, their value creation skills, their labor. If you watch the stock ticker every day, that doesn't make the management team move any faster. If you trade it, if you trade a stock a lot, let's say, and it has a superb management team, then you're not even capturing the alpha of a management team, because obviously if you put a bad management team and a good management team in identical cases, if you give those people one day, the value will not differ, because in one day the bad team hasn't had time to destroy anything and the good team hasn't had time to solve problems and create anything. Give those two teams 3 years. The longer you give them, the more the value should diverge from their respective, value creation skills, or in the other case, value destruction skills. If the longer you hold a company with a, let's say, really bad management team, the chance of making money from the team having created value goes lower and lower. Whereas a good management team, the longer you give them, the higher the chance is that they have created value and more of it. So the only way to capture the investment case, which relies on a good to great management team, really is simply to hold it for a long period of time. If you hold a stock belonging to a good management team for 3 years, odds are the difference in value from when you bought it to 3 years later is going to be greater than if you held that stock and bought into the labor of that management team for 1 week. Should be a correlation between time held, value created from where you start, where you bought it. So the longer you hold it, the more you should be up, theoretically. Anyway, first of all, thanks to the sponsors. Let's dig right in. Okay, I think this is a very good, I'm going to say, lesson or example or anecdote, if nothing else. Okay, this is the SILJ, I think, Prime Junior Silver Miners ETF. Yeah, I think it's SILJ. I don't own SILJ, but it's kind of the closest you can come to a junior mining index, I guess, because juniors tend to, trade more like silver juniors, even the gold juniors. So, okay, what can we see here? It's obviously there's a lot of, it's been a downtrend since at least 2021 here. And it's gone down since, 2020 basically. And it, very choppy. So the volatility is just extreme. But consider this. It's I bet there's a lot of people right now that might have entered during this recent move because volumes have shot up in juniors, or they're thinking of entering now, for example. And a lot of people that maybe they didn't dare to buy when it. Most people do not buy here. 1% of people actually buys here at these lows, 1%. Most people, if they're even in the sector still, they usually, I've seen a lot of people comment, I'm not going to put any more money into this sector until it, they believe it's a bull trend. Obviously, the big bargains are long gone after everybody knows it's a bull trend. Does everybody know this is the start of a bull trend? No, I see a lot of skeptics out there. I see a lot of people thinking they're gonna top out and this was just a false rally, like this was, yada yada. But anyway, just look at this. Okay, at this point, and this wasn't long ago, every single buy you would have done in SILJ would be in the red. And I talked about this in the recent video I may or may not upload actually. Every single buy, peak stupid. Every single buy since at least 2020 since July 2020, you would be down on. If you just bought and hodled, bought more and hodled, bought more and hodled, whatever. Peak stupid. If you bought 100 times since 2020 July and just didn't sell any stocks, let's say, or sell any of the SALJ, you would have 100 examples in a row, 100%, 100 out of 100, where you look stupid because you have a paper loss. People can average down for a while. Typically that's how it works. I mean, if they got in here, they might have the stomach to average down maybe to here, maybe to here, wherever, and then they can't anymore because the evidence is mounting that they have no idea what they're doing. Every single buy is, if you bought 50 times here, 50 examples of looking stupid. If you when we're down here, for example, and if we're up to 100, imagine if you were even one of those very, very few that actually could dip by like that. It can't feel nice. You look stupid. You look like the worst investor in the history of investing, basically. 100 out of 100 buys that look dumb. So most people, obviously, I mean, they can cope.
Live market call featuring our macro and activist mining research.
Sorry about that. Obviously, a few can stomach that, but not many. So you're going to see a drop off. And even the ones that are left are going to stop buying at least. Because now they want evidence of a market turn. They want evidence of, or the promise that the next buy better not be like the 30 last buys and show a paper loss. So they're going to wait until they're convinced that the trend is up. But think about this. It's like, at this point, again, not long ago, every single buy was in the red. Okay, looks stupid. Incredibly hard to be dip buying. If you're a pure value investor, by the strictest definition, the lower this chart goes, I mean, if you believe it's cheap to begin with, this is just a proxy. It can be whatever junior you actually like and think has value that's a lot higher than where the share price is. The lower this goes from the value you have in mind, the more you should buy. It's not like, I buy 100 there and 100 there. No, you should be buying maybe 100 shares there, 300 shares there, 400 down here, etc., etc. Still, I mean, look how quickly it can turn. Going from every single buy being red, paper loss, stupid. If you would have continued to average down, and especially again simply the lower, the cheaper they went, the more you bought. Today, any price point within this green box, any time you bought within this green box, you would at worst case have a neutral return, and in all other cases you would already be up. Going back to, I mean, the box stretch, you can go back even further here, obviously, but let's start here. I mean, all the buys since almost every buy since early 2022, almost 2 years, or around 2 years, all of a sudden would show a profit. And imagine you did 100 buys over this period of time, and you did 50 within this green box. So you went from 100 out of 100 looking stupid, looking dumb, showing paper losses, to maybe only 50 out of 50. And that changed within the span of 50 days. Going from 0 out of 100 to 50 out of 50. Or 50 out of 100. Imagine how extreme that is. Or think about how extreme that is. And that was a change over 50 days. That's why one of my recent videos was like, looking as from a value perspective at least. I mean, if you're a trader and you're only after, catching these or whatever and playing it small, if you know what I mean, then that's another topic totally. I'm always speaking from my point of view, the way I invest, as mainly a value investor. So in that case, again, imagine it's like, I mean, a value investor in the strict sense should be buying more here, and of course, which we've talked about a lot of times before, by definition, since a downtrend always ends, the longer it takes, the closer you are to the uptrend, by definition, even though you don't know how long it will be. This is obviously closer to the next uptrend than this is, even though it's the same price. Because let's say, well, I mean, theoretically, this could have been the low. This is the next closest in time at the same price, third closest, fourth closest. This would have a higher compounding power, obviously, because the returns are more near term. And if you sell, if this goes, I was going to say straight up almost, and we sell here, you would have earned more in a shorter time period from here than here, even though the returns would have been the same. So from a compounding perspective, I'm not going to say maybe game theory, but you get my point, I hope. There's like, by definition, every new low is obviously closer to the actual low if that low isn't it. So if you liked it here and it's as cheap here, this is still closer to the low, because this may be the low, or if this is the low, this is a shorter amount of time to the low and to the to the positive returns than from here to here. So it's just I don't know if I should call it like game theory, but I hope you get my point. But think about this concept. How quickly things can change. That, I mean, in reality, to make the, obviously, if this turns out to be the low, I mean, you would, the best buys was in this green box. I mean, it might be some of the best buys anyone can buy in the SILJ for the next 4 years, maybe. But think about how hard that is to just average down and look increasingly stupid, since the evidence is just mounting. And every time you hit these levels, you will look wrong at like 100% of your buys. But when we go up here, let's say, all of a sudden, 75% of your buys might look smart. You'll be making money with a 75% hit rate at that time. And let's say that's 50 days from now. So that's only 100 days, and you went from 0 out of 100 to maybe 75 out of 100 and look like a genius. That's why I keep saying it's like, if the only thing you know, and that's what it feels like for me sometimes, if the only thing you can do is just buy low in a cyclical sector because there's 100% certainty of a rally coming. It's not a 99% certainty that this is going to have a bull leg or a bull market after a bear market. It's 100% certainty. The only question is, when will it start? How much will we make? How cheap can we get in? That's it. That's why Pierre Lassonde calls it the easiest sector in the world. He calls the gold market, because it always crashes and always rallies. Of course, I mean, that goes for basically anything, stock market as well. But this has, I mean, more pronounced cycles, and they're more violent. They come more often. I mean, a 50% decline in juniors happens like every 2 years, whereas in the stock market it happens every 8 years or something like that. Anyway, this is I think this is worth thinking about, and this is of course not priced in by the market. It takes 18 years to bring a new mine online. yet we're facing supply shortages today. We're banning critical material imports from China today. We're demanding OEM source domestic metals today. We're fighting two wars, electrification and a failing grid today. Wake up. Think about this. Obviously, one thing, and that's why I recently talked about like the value of permits, especially in the West. I mean, in Africa, for example, permits is not a problem. It's more jurisdiction and perception, etc., etc. But it's like in the West, given it's typically in the West where it's hardest to get the permits, and OEM source domestic metals, not from Africa, where it might be easy to permit. So imagine how, and with this, banning critical material imports from China today, they recently sanctioned Russian metals on the LME and banned imports for copper, nickel, and aluminum to the US, I think. I mean, it's just absolutely crazy. So how much are mines or projects that could become mines going up in value just with these headlines, and what this means for the future domestic supply-demand picture? Because the US is a $33 trillion economy. And the domestic supply of nickel, for example, I mean truly domestic, is one nickel mine. And the problem typically in the West is getting permits for a mine. So how valuable, given these tailwinds, are, let's say, North American projects that are either in production or really could get into production? I'm obviously thinking like Magna Mining, for example, which is probably the most advanced junior in North America. It's absolutely crazy. Is all of this showing up today? Now, I mean, nickel is up 5% today, for example, but a lot of metals are up. But like, think about it. What's the most precious commodity really in the West today? I would say it might be permits. Because if this was like, if we were in Africa, for example, permits is not a problem. Typically in many places, permits are no problem. That's not the bottleneck in Africa. It's whatever, capital and infrastructure and stuff like that. But it's like, hey, they could bring, let's say, theoretically, as much supply as they wanted and needed online within 5 years or something. In the West, it's like, 18 years to bring a new mine online. I don't remember what the permitting timeline is. But think about it. It's like, okay, if the market doesn't price this into the juniors now, for example, which is fine. I mean, that's how opportunities are made. If the market would be fairly pricing everything, we would have no opportunities. There would be no way of actually outsmarting the market or outweighing the market, because everything would be priced in. So we can, again, like always, complain about getting opportunities, or we can actually jump on the fact that that's how opportunities are made. Think about all this, what it could mean in the future, and what projects and type of companies, let's say, would get the most tailwinds from these. Because obviously, if we have like whatever, nickel and copper shooting through the roof within the next 2-3 years, if you have a copper nickel project that's going to be into production in 20 years, you might get a fat bump because there's going to be a copper and nickel mania. But still, the ones you don't know if you can monetize that truly, because it would still be most of them would be relative trading sardines, because the value would be at face value at the current prices. But if you're producing during that mania, you're reaping the rewards of it. These factors, let's say, they became tangible. You're monetizing it straight away. I hope that makes sense. Just an interesting look here at oil. I don't know how. I don't follow oil that closely, and again, I don't trade based on my shorts or anything like that. But I watched a presentation by some commodity analyst at Bloomberg, and he believes that, I mean, he's quite bearish oil. He believes it's going to go down to the marginal cost of production, which is supposedly around $55 per barrel. I mean, that's obviously great for miners, because one of the problems for miners have been cost inflation, and that's why, and people still today, now with gold at all-time highs, new all-time highs even, they're doubting the miners, because last time they saw, the third time gold rose to 2000, the inflation had caught up so much that the margins got squeezed again. So like the gold business wasn't as profitable the third time it hit 2000 in the last couple of years as the first time it hit 2000 in 2020, because cost inflation kept on rising. So even if gold got up to the same level, which was basically around all-time high, the miners were making less than the first time gold reached 2020. But I mean, what if oil, for example, which is a big input cost, doesn't keep up with gold? Because that means lower production costs for miners. Not, I mean, overall necessarily, but it's like energy, etc., is probably a big chunk of it, especially for, I would say, open pit mines, where you have these huge trucks running all day, every day, many times an hour, and just slurping up, gasoline. Oh yeah, I've already gone through this. Oh yeah, okay, this is what I was gonna look at. So here I posted a chart. This is Defiance Silver. It's one that's at least been around since 2016. It's primarily been seen as a silver junior, but it's had its own hiccups. I mean, this crash here was exacerbated. I don't know how to pronounce that, but it was exacerbated, I think. Yeah. Anyway, exaggerated because there was some cheeky Mexican who basically, for a while there, stole their Tepal gold and copper project, which was, is a really good-looking project in my book. Worth quite a bit, probably. Made a lot of sense at much lower. I think it had a positive, quite positive economics at $1,250 gold. Now it's 2,400, and copper, which is at 450 or something per pound today. So obviously at face value, that project is probably worth several hundred millions today, at face value at least. Anyway, so they got that stolen. Obviously, that kind of killed the sentiment in the stock. But you can see these, like, I mean, it's not like this is a huge sample size, but still, okay, you have an extreme low. This was the bottom of the biggest bear market. Okay, 4 years, then you have a crash low. This was during the COVID flash crash, which made no sense really. I mean, silver and gold went down, but again, this sector traded like it was worthless, and everyone had stopped buying silver and gold, which was absolutely not the case. But that's how markets work in a panic. And now, just recently, we had probably the biggest divergence from gold and silver miners and the price of silver in like decades. So this actually might be worse, even though it's around the same level as the other ones. But down here, silver price was like $14. Here it was like, I don't remember actually what it went down to. Maybe actually, did it go down to 14, 12? Something along those lines. Here, silver was still, I think, around, $24? So I think this crash low is actually, or not even crash low, but this just extreme depression low is probably cheaper and more extreme than either of these two actually. Still, I mean, you can kind of see, okay, rips, long outdrawn correction, rips, long outdrawn correction, and down to extremes again. So timing wise, just from this sample size, yep, we're getting ready. We should be getting ready. Valuation wise, absolutely, we're already there. These juniors, some of these juniors, the higher quality ones with legit, let's say, projects, they should already be 200% higher. That's why you're seeing the mid-tiers and billionaires buying up some juniors now for 100% premium. And obviously, they're not paying fair value in their eyes. They think they're still buying them on the cheap. So they might be in reality, the acquirers might think they're undervalued by 200%, which is my point. So this sector shouldn't need an excuse to go up. It should go up because it's unsustainably low, way too cheap, and all that. But still, so okay, and we can see here, okay, what happened out of this bottom? It spiked, consolidated for maybe, I don't know, is this a month or two? Maybe something along those lines. I mean, it kind of consolidated here, whatever, but it's like, created whatever, kind of a bull flag. Then it spiked again, and this was the real spike. But consolidations around the way. So zigzagging, spike, zigzagging, spike. Nothing goes straight up. Every single time you see these consolidations, I mean, just look at this whipsaw here. That shakes out people. 100%. Most people do not make that much money because they typically kind of get in late and then they might, get flushed out on the first pullback or whatever they average up as well. 1,000 different factors, just how humans typically behave. So most people don't actually make much money anyway. And let's say if somebody makes 50 to 100%, they're going to probably give it all back because they're going to be averaging up even more up here, and then the correction comes, and then they basically leave the sector when we get this low again. But just for similarities, like, okay, spike, consolidation, then the real move kind of begins. Okay, this was more of a flash crash. This was more of a consolidation bottom, I would say. But flash crash, up pretty quickly, consolidates, boom, it starts running again. So what are we seeing here? It's like almost down to the same level. If you would draw a trend line, it would basically line up pretty good, I think. So extreme spike, consolidation, big spike, extreme spike, consolidation, not a straight linear spike, but it's like, I mean, if we look at the time that passed here and the return, so this was obviously an extreme rally, and now we've had a first spike. And now it's gone down. Despite the fact that gold is holding up, silver is holding up, and all that. So, I mean, probably like all the time. It's like people don't believe the first rally. People are not greedy enough. The ones who've seen this are not greedy enough to jump in yet. I mean, they need more convincing. And they're probably the ones buying up here, and the ones buying up here, and the ones that might be buying up here. So this is highly... there's high skepticism here. And there's obviously some profit taking. And a lot of people that, just traders, whatever. But the big move was like yet to come. So it's an impressive spike, but it's like nobody would consider this to be a full-blown bull market here. Nobody would say this was a bull market. It was obvious it was a bull market up here. It was obvious it was a bull market for a time up here. And that's when people buy in. But anyway... So someone just, basically sent this short, like, this is what's gonna happen, I guess. It's like, okay, it's gonna have maybe like this, flash crash, and then higher. Obviously, especially if you didn't buy the lows, which almost nobody did, then you kind of want this to happen, obviously. You want other people to think so. You're looking for confirmation bias. You're looking for people to agree with you, so they sell so you can have a chance to get in. That, you didn't buy this low. I mean, if this turns out to be the low, imagine if you missed it. That's going to suck because you're already seeing people, from the lows being up 50 to 100% on some juniors, and they missed that. Obviously, they would want it to go down even lower, so they're gonna, want to convince people, no, it's going to crash. You might sell. You should be selling now, and they might try to get in here, but they probably will miss the next bottom anyway. But anyway, so my answer to that, the funny thing is he posted this after I posted this next thing. So after posting that chart, I did another one. It's like, okay, let's look at what happens if we are not there. Meaning if this is not, it does not rhyme with this here or this here. Meaning that, no, this is in fact not the first jump off of an extreme. And, basically this is step one of a, major bull leg or bull market, who knows? What if it's not? Okay, what's the worst case? Well, if we're not here, but we know this is extreme. I mean, this sector is ridiculous already. So maybe, let's say we're here then. Even though this is a higher high than here and here, so it doesn't rhyme with that. Or I mean, theoretically, let's say we're here, that or down here now, I guess. But for simplicity, this is actually the one I highlighted. Okay, so let's think about this. Let's say we're long here, or let's say, I mean, ideally we were buying all the way down in these juniors, and we've seen a brief spike, and Dow is starting to creep in again. And now you're like, whoa, oh, I mean, I cut my losses in half in some of these juniors maybe. And, should I be running now? I don't want to make the same mistake. Maybe there's 4 years more, whatever. That's the stuff that's going to play into things. And that's what people, obviously, that haven't bought in, they want you to think. And I mean, that's most people, because most people have not bought in yet or started buying. I mean, none of the retail, the masses is certainly not in. But okay, let's look at a kind of worst case scenario. Okay, we know they're still very, very cheap, like extremely cheap. It's like the gold juniors, someone said, well, they're actually cheaper after they went up because gold went up that much in the last month. So there's like, okay, the same opportunity but a higher price. Okay, so that's from a value investor standpoint, that's all you need to know anyway. Is it cheap? Yes. Gold is at 2,400. These gold juniors, according to Pierre Lassonde, is pricing in a $1,600 gold price. So as a value investor, we shouldn't even care about what the charts are saying. We shouldn't even, I mean, we're on easy street. We have a margin of safety to like $1,600 gold. So if gold goes to $1,500 gold, yes, then we overpaid today. Then we should have sold today. Is that likely that gold is going to fall $900 anytime soon? I don't think so. Might go up. I mean, probably more of a chance that it actually goes up 900%, $900. Still, to make my point, let's say we're actually here. This was a false rally. It's going to keel over, make another low. This wasn't even though how extreme this wasn't the low. So it goes to an even more extreme level. Okay, what's going to happen from there? Well, this sector never stays at extremes. It might stay for a few months. Here it stayed for, I mean, depending on how long you would call this, staying here. I mean, I think basically the juniors and minors, they retraced their whole move within like 15, 30 days or something, going back to where they crashed from. So it's like worst case scenario from these extreme valuation levels. Assuming this actually is not the first step of a bull leg or a bull market, then we have this to be, quote, afraid of. Price getting even more extreme for a limited period of time, where we have the option, you can sell, you can buy, you can hold. I mean, obviously you should buy as a value investor. That's just beyond obvious. I mean, if these are screaming buys now and they get cheaper, it's like you shouldn't even need to ask anyone if you have a sense of like what value is. So in the quote worst case, what actually would end up happening is that, again, let's say you were long here, it goes down. Were you dumb for holding here? No, you were going to be up several hundreds of percent within 6 months. If you held here, you would be in extreme profits within 6 months. Every single buy over the last 4 years would be way in the green. But prices go down. So for a short period of time, you actually have more paper losses. You already look down, most of your buys are in the red, price goes down, but you're like, hey, I'm gonna try this buy low thing. I'm actually gonna average down in a cyclical sector with 100% chance of a bull leg or bull market coming after a bear market or a bear leg. Okay, so you average down. What happens up here? Like I described here. Worst case, we are here, goes down, and you get to buy more here, and you end up earning even more up here. If you held your stocks here, let's say, and the price goes straight up, you would make less than if you held the same stock, took a paper loss first, and bought more. Regardless of how little you bought. If you bought for $100, you would still make more. If you added 0.02% to your portfolio on this dip, you would still have more up here than you would have if this final, let's say, flush didn't come. But that's what people are scaring other people about, That's why people end up trading. Again, it sounds arrogant, but it's like, think about it from a game theory perspective. We know it's extremely cheap. We know there's going to be a bull market. Because the funny thing is, what's always going to happen, let's say this chart is right. What do you think he's going to take away from that? First of all, I think his game theory is flawed, because I've already shown that it's a heads you win, tails you win even more kind of scenario. So you can't really go wrong if you hold and buy at extremes and they get cheaper, you buy more. That makes absolutely perfect sense. That's the only way that I can come up with that you reliably can make money in a cyclical sector over the long term. Just buy more the lower it goes. And that's for every single commodity sector. Basically, yes, there are some specialty sectors which I don't cover, but it's like, gold, copper, whatever, silver, yada yada. But let's be the devil's advocate to this, or let's look at this view. Let's say he doesn't buy here, he sells here, it goes down. First of all, he's obviously not a value investor, so that we can, write off immediately. When will he buy? Will he actually buy the low? What if it just goes down here? Is he waiting for this to hit before he buys? What does he do if it bottoms here, or here, or here, or anywhere above his idea of where it's gonna go? Does he buy back when it's gone up here already? When it's gone up here? What if he buys back here and it tips over again? Is he gonna believe this is coming? This is what I'm talking about. It's like there's no legit plan really for a lot of people. They don't have like, okay, if this happens, why does that make sense? If it doesn't happen, why does it still make sense? Whatever. It's like they're playing. I'm not trying to bag on this guy. I'm not. I might be putting words in his mouth, but this is to try to showcase why I think what I do works, or why it has worked, and why I expect it to forever work in a cyclical sector. Because if he's wrong, let's have that idea. First of all, if he's right, it goes down there. Then let's assume that he actually buys here. Question is, how much does he buy? I have no idea. Okay, so it goes down here. He hits his perfect blue sky case. Again, how? I mean, imagine the sector sentiment there. Are we gonna expect that this guy, in a hurry, can get a full position in his favorite juniors without driving up the price? That's first of all. I mean, if he has very little capital, that might be possible. But what happens, again, it's like there's a lot of things that have to go really right, contrary to what most people do, for this to even work the way people think it's going to work when it actually happens. Because in hindsight, everybody's going to think, I should have bought here. But when we are here, nobody's buying. So it's easy to fool yourself as well. That's like, oh, I'm for sure going to buy when it's cheap, when the bottom is in. And then you don't realize that there's going to be end of the earth kind of things written on Twitter. Are you really gonna feel like, oh, now I'm gonna go, balls to the walls, all in here, no problem. I don't care if 99% of people on Twitter says this sector is dead forever and it's Armageddon. I don't buy it. And what happens if he's wrong? What happens if we are indeed not here, but we literally are here? And he's expecting this to happen. Okay. So he's sitting there waiting at this point. Waiting for the final dip. Everybody's always waiting for the final dip. That's one thing I noticed. Okay, it goes up like that in a heartbeat. Well, what do you do then? What does this guy do then? Does he change his mind? Does he buy in? What if this happened? He buys in here, he's finally, okay, we're not going low, we're going higher. And then it's, consolidates again. Or it spikes to here, he buys in and it goes down there. What does he do then? Because this, I bet at the time, this kind of looked like, oh, maybe this was a false breakout and now it's going to go down. What's the plan? I know, again, it's like I have a very, very simple plan. It's like this is a cyclical sector. The volatility on a year-to-year basis is so extreme that you don't even need anything close to perfection. If you bought within this time span, which is like 2014 to 2016, even going as far back as 2013 on the way down, every single buy would end up being in profit. Every single buy, when we reach this top, anything below that would be in profit. Meaning that literally everything in this black box, every single buy, would show a profit at this point in time. Whereas not too long before, only this buy showed profit. That's going back to how quickly things can change. You could look 100% like a moron, and that's why, again, the topic of the last, I think it was the last video, was look smart or make money. If you're gonna make big money, which you would do if you averaged down as it got cheaper. I'm not seeking perfection here. Nobody's going to be able to get in at the low. Nobody knows when the low is. But if you, have a clue, it's like, okay, I'm starting to buy here. Or even if I know a lot of people started buying high. Just because you bought high doesn't mean you should, that's like, oh, everything is lost for you. No, that doesn't matter. If you could have started buying up here, as long as you change your mentality to like, oh, I'm gonna again ramp up my buying the cheaper it gets. I'm not gonna buy for 2,000 here, 1,000 here, 500 there. It should be 500, 1,000, 2,000. You would drag down, and imagine you do that over a long period of time. You just get good at actually buying more the lower it goes. I mean, you're gonna be I mean, in the end, it's not going to matter. The only problem is if you never get that. If you never get that, and you're in a cyclical sector, if you're never able to buy low, I buy high all the time. I bought these tops. If I had money, I was buying, and I was 100% long. Just that I ramp up my buying when it goes low, and do stock picking, and value shuffling. But if you want to take the really easy route, right now you could go out there and buy pretty much every single company that Ross Beatty is invested in, every single company that the Landins are invested in, any single company that Rick Rule likes, any single company that whatever. I'm trying to come up with some more names, but like, you get the point. Third-party validation, people that are much smarter than you likes the story. They think it's cheap, especially it's better, the more recent they bought, obviously. Because like the Landins in Philo Mining, they bought in at whatever, now it's at $3 billion. So it's not like you're getting in super early in that story. But still, it's like, I mean, that's the easiest way. I mean, I can't see how you lose money. It's like if you just get this simple stuff like this, and why, if he's literally not buying juniors because he thinks there's a last flush coming, I don't. If I had to bet, I would say he's probably not a good investor. Because from a game theory perspective, it makes no sense. You're risking the returns from, let's say, here to somewhere around here, let's say. And I'm using Defiant Silver as a proxy. I'm not saying that Defiant is necessarily going to go up, 500%. But a lot of juniors have that, higher quality juniors could that could be a reality, like 500%. But if you don't buy because you expect a final flush, that's the cost of you being wrong. The cost of me being long here, is that I get to buy even cheaper for a while and end up making more money when the last flush, the real bottom is in. And this can already be the real bottom. We could be here or we could be here. The thing for me is that it doesn't really matter. It's going to feel nicer if we're here because, there's a rally coming sooner than later. If we're here, we're going to eat some more shit sandwich and look dumb on maybe 99% of our buys, but we're going to end up making more. This is going to feel better. This is actually going to make us more money if we do the right thing. That's kind of the two scenarios that exist. Final flush, make more money, or we simply make good money. Whereas again, for him, it's, well, first of all, he's not a value investor, so it doesn't matter. He was probably not buying any of these bottoms. So again, what are his options? Either it actually goes down here, and he needs to figure out, like, okay, do I wait really down to here, or when do I start actually buying in? Because if he's waiting to buy here and it turns at any point before that, he's lost out a bit. Sure, he might, get in a bit cheaper maybe than here, but again, is he going to believe that would be the bottom, or is he going to wait for this? And if he's wrong, we might be here, and the juniors are about to go on really accelerate the what this start was. So think about that. Would you want to trade places with him? Compare my two scenarios with his two scenarios. Either he's missing out, or he needs to kinda somewhat play it perfectly to get a bit more. Or in the blue sky case, he would get a perfect trade and somehow manage to hold his nerve, go against the sentiment being even worse, and at the same time be able to deploy his entire portfolio or pick up every favorite stock at the exact low without really getting price to go up. Compare those two strategies. Which do you think actually you can repeat over and over and over again? Just look at any cyclical sector. Buying low, increasingly buying low, has worked for an eternity. This stuff is market timing, bottom picking, fear of paper losses, greed, I would say, absolutely greed, and all of that. That's why I asked, just to, not that I tried to bait him, but it's like, he showed me these shorts. I'm just, are you selling or buying? I think it's, because I didn't want to put words in his mouth, but he didn't respond, so I guess maybe he doesn't even dare to take a stance, because if it goes up, he might look dumb, for example. And again, most people, going back to the look smart or make money kind of thing, if you're afraid to look dumb, if you can stand to look dumb in your own eyes, whatever, I don't think you're gonna make any money at all in this space. The people that look wrong, look right most of the time, they don't make any money really. And it's typical. There's a lot of hedging, whatever. I've been bullish since 2015. I look more wrong than right, and I still make money. Because it's more important for me to make money than to look right. I can't pay bills by looking right. Well, I guess you could. That's typically what the saying is. If you can't do it, then teach or whatever, which is kind of ironic because that's what I'm trying to do a lot. But I was gonna say, in my case, I don't get paid for these videos. I have my show my passive banner sponsors and all of that, but it's like, this is me trying to educate, but it's not like I teach a class and get paid for it, so I'm not living off of educating. This is just what to me this is fun. The most fun, I think, the main attractiveness with the market is that it's, and especially this sector, is that people have such a hard time beating it. So I see this just as a more profitable game than poker, basically. And if you have a solid strategy and can keep your nerves, you're gonna end up making money like you do in poker. In poker, it's not the smartest people typically that necessarily wins. It's the ones with the best strategy and who don't go on tilt, don't let emotion play a part. If they take a big loss, they don't play that much worse. The ones who do, they might be the best players in the world, but if they can get unhinged, that might be the Achilles heel, if you may. That they might be the best player 90% of the time, but if they're the worst player 10% of the time, they're probably going to lose more than they actually make, because they're going to lose more during that 10% period of time when they're on tilt than they make when they're actually on their A game 90% of the time. That's, poker is brutal. I actually prefer junior minors, because this is like broken clock investing. This sector is basically the hand that always loses and always wins. Literally, it's like, but you don't get second chances in poker. It's not like, I played this hand, I lost, but hey, one day I'm gonna make money. It's like, I played the hand here, lost first, then I made money. No, it's over after the hand is over. So this is like a broken record, really. Any commodity sector. The funny thing is, you can make a lot of money because everybody forgets it's a broken record. Every single bottom, people think that the sector is going away. Every single top, they believe this sector is going to go higher forever. Let's think about this. Look at this return here. That's 400%, and that's an SILJ. I don't know how long that is, but let's say it, kind of kept going in the same pace almost, and it just went straight up. It's like, I mean, you would relatively quickly, I was gonna say, like start to price in infinity. Well, let's just do it like this actually. Yeah, so it just gets ridiculous. But that's how we act. We price in that what has happened is going to continue to happen. And these are like the larger miners. I mean, these are just absurd returns. Think of the miners if the SILJ did this. But I hope you get my point. It's like, why am I chill? Because in my view, I cannot lose. If I stick to companies that I think they have, let's say, good access to capital, they'll be around, they have a project that is worth something, even if they don't have much money now. But it's like, they're not going to go bankrupt. Yes, they might not raise a lot of money, and they might get taken over at these cheap prices, which kind of feels a bit sucky, because we've seen even these 100% premiums. I mean, that's nothing to what some of these juniors will do. I mean, if we're here and we get paid here, that's nothing to if we could ride some of these juniors an entire bull leg. But I mean, it's way better than nothing to get 100% premium. But still, it's like, the way I see it, I can't lose. If you just get how simple this sector really is, I mean, that's the thing. That's what I'm trying to hammer home. This is not rocket science. I bet 99% of people are overthinking this sector. This is a silly sector. It's way simpler than you think in one sense. The actual exploration, mining, process of mining and whatever, that is very complicated. There are a million things that can go wrong in a mine that I don't even know about. But how sentiment works and how this sector works, how a cyclical sector works, that never changes. This is just basically the manifestation of human psychology. This is never going to go away. This sector is going to get way overvalued, or overvalued to way overvalued, and undervalued to extremely undervalued. And then it's going to go do the same thing again and again. You don't really even need to know much about miners, but the mining sector, to make money in this sector, because it's like a broken slot machine. Sometimes you lose on everything, sometimes you win on everything. That's basically it. But if you can acquire some, or learn some stuff and actually have some sense. I mean, if you don't get this, if you don't get how a cyclical sector works, you're gonna have a hard time no matter what. Then you have to be a really good stock picker. You have to have nerves of steel, I was gonna say, and all that. But if you understand this and don't take it personal, yes, cheap can get cheaper. Yes, expensive can get more expensive. It's just that when it turns, it's gonna just be more brutal the other side. So don't take anything serious. Like this entire period here, for like 2 years, this could have been a no-brainer buy. But for 2 years, it looked like down here, for example, it looked like it wasn't, because you were down on one. And that's what I meant by this. It's like you must be prepared to look as stupid can be if you want to make a lot of money in the sector, because you have to call out the market's bullshit, not only through months but sometimes years, and you have to bet against more and more people, because here maybe 98% are bearish and you have to be bullish. Up here 90% of people are bullish and you're bearish. I have a problem being bearish when other people are bullish. My biggest strength is that I'm very, very good at having a firm grasp of the obvious and acting on it. Buying low, buying cheap, buying more the cheaper it gets, that solves 90% of my problems. That's why I can afford to buy up here, because I never ever sell around these levels. Never ever. Yeah, and it's like, okay, let's go to some other topics. This is a Sprott Nickel Miners ETF. You can see, I mean, again, I'm not trading based on these charts. I don't own this ETF, but it's like, there's some, what's it called, green shoots out there. So could this be like, I mean, the nickel sector got absolutely decimated. This is an ETF down 47%, 47% in what, like less than a year? Maybe a reverse head and shoulder. We have a volume spike here. This looks like it could be a resistance zone, and obviously this has nothing to do with value. This is trading stuff, resistance zone. I mean, it's not like, oh, value has a resistance line. No, that's share price has a resistance line. Sometimes the traders subsidize us. Maybe the value of these nickel juniors went from here to here over this period, but thanks to bad sentiment, traders, yada yada yada, it went down. So they're subsidizing value investors because all of a sudden there's a even higher price to value gap because of the traders, and this is going to add up in the long term. A percent here and there, I mean, it might not look like much. That, oh, I mean, okay, this was, it's already crashed, so okay, whatever, it went down 10%. But in the long run, let's say we're gonna go up to this level again. So from this level there, that's 91%, and from here that's 71. So that's 20% additional future returns, let's say, from this 10% dip. That's why I keep saying, I mean, the opportunities at around where was I? These lows here. I mean, they just go absolutely bonkers. I mean, from here, for example, it might be whatever 400% to the top. Down here, it might be 700, 800, 1,000%. It just goes absolutely bonkers when you're at extremes and you have more volatility. That's why it's like pretty much greedy. If you think there's huge probable upside from these levels and you don't buy because you think there's going to be one last flush that you're going to get even more, that's greed. Let me tell you, the reason why people, even though they think that's the reason, let's say you haven't made money over the last 10 years or whatever, if you're in the mining space, it's not because you bought here instead of here. Think about it. But that's how everyone seems to believe, or that's what it looks like. That, well, I'm not buying here because I think that's it would be so bad if it would be so bad if we were here and you were buying. Oh my God, yeah, that's the reason why you don't make any money. Of course it is. Because you can't afford a single paper loss. Of course, yes, that's the problem. It's not the fact that you could, whatever, it's like had 1 to 2 years to be able to average down and then make a shit ton in, a year or something. Yeah, no, it's because you bought here and not exactly the bottom, which I never do. I mean, it's just silly, but hey, I mean, this is just a chart of the gold to oil ratio. I mean, again, I don't trade based on it, but I still, I mean, this is the stuff that keeps me occupied while I'm just hodling. So here's like, okay, broke out of this, spiked. That coincided with the start of the gold miners rally. I mean, it kind of makes sense. If gold is going up and the cost of energy is going down, and I mean, okay, this is a very long-term chart, but like actually gold has been outperforming oil for quite a long time. So I mean, and this was a spike, and this was an even larger spike. So it's like, I don't know what's happening here, obviously, because I'm not a macro guru. What if, things are changing? What if gold is going into something happened in 2020 and we are in a revaluation period for gold? That gold is going to gain in prominence over the next decade, 2 decades. I don't know. Maybe. But still, it's quite interesting that when it spikes, it's like coincides kind of with the gold miners having a grand old time because their input costs go down, and or at least the oil goes down in price more than gold at least, or up less in price than gold, whatever. So from an inflation standpoint, zinc, big fat candle. I mean, when was the last time we saw? I mean, it's not exactly the same, but I mean, fat green candle. We've seen this here and here. Here was the start of something. Pretty fat candle here, pretty fat candle, like continuation candles. I guess this was a fat candle that proved to be a kind of a false breakout. But still, long term. I mean, there's like shortages coming, or there's underinvestment in basically every single commodity. And it's like Quinton has recently talked about this. It's like zinc is looking very favorable. I remember it's like, I don't know, I actually think it was like 2008-9 where I watched a interview with Lucas Landin, and he said, yeah, we're bullish on zinc. We think there's been a lot of underinvestment. Of course, I mean, it would be fun if it was around this time. I'm not 100% sure it was around this time, but it's like that would jive with the Landins, who are like what they're really good at, except executing and discerning real value. They are extremely good at buying cheap. Fruta del Norte bought that for 250 million from Kinross, I think. Now it's like a $5 billion company or something like that. They are very good at buying cheap. All the billionaires, what they do is buy cheap. That is how they make their money. They buy cheap. They don't sit there looking for, is this the bottom? Is tomorrow the bottom? Ooh, we might have another flush. I'm gonna hold off, because they know what they're risking. If it's cheap already, then it's a buy. Because they can foresee, they don't know if there's going to be another flush. If we're at levels where extreme future returns are expected, that's good enough. You buy. If it goes lower, you buy more. Problem solved. There is no problem. That's why you see McEwen and Pierre Lassonde and Gustra and Rick Rule. It's like all of the people that make money in investing, they are buying now. The ones who don't make money. They're the ones sitting on the sidelines now, and they're going to be buying when this goes up. And again, it doesn't matter. Let's say there is another flush. It doesn't matter. We're just going to make even more money. And when it gets really going, then everyone that doesn't make money is going to pile in. Like I bet a lot of people listening now piled in here. That's very human. Just because you did it once doesn't mean you can't break the wheel. It's like break the cycle. Yeah, long rant, but I hope you got something out of it. If I touched on any companies, assume I'm biased. Define Silver, for example, I own. Not a huge position, but it's like, hey, I mean, I think it's cheap. There's a lot of stuff I think is cheap. That's why, I mean, and I've talked about this in a sense. It's like diversification probably makes more sense now than ever. I mean, if you diversify extremely up at the highs, you're gonna catch the full brunt of the beta swing basically, because you own the entire sector. Whereas if you were all in one stock here, let's say a risky one, you could make a shit ton of money. But it's like if it's an exploration stock that you're all in on, if it works and it was cheap, theoretically you could make more money than anyone else. But the problem is, if you go all in, if they don't discover anything, you kind of burned your bridge at the worst possible time. Because if you just own the sector, own 30 high quality juniors, you would almost for sure make money. Good money. But risking that to make, I mean, that's a bit the same as this, waiting for a final flush. That's like, it's a bit greedy, and I talked about that when I touched on condors. Like, I know I was kind of greedy, but the compounding effects would be awesome. Obviously, I mean, imagine if condor had hit and that fat position ran up 400%, and I could reinvest that in beta juniors. Jesus, wow. I mean, that's a alternative universe that I'll never see. So I mean, there was logic behind the madness, but yes, it was greedy in that sense. But it was simply because I thought the target was so convincing. It's like if it works, the revaluation could happen in 6 months, not 6 years, etc., etc. But I touched on that. Yeah. Anyway, thanks for listening, guys. Bye bye. Not investing advice. Bye.